of Cummins, now to the management of CEAT to discuss their revenue jump as well as where they're seeing the demand headed. Kumar Subbiah, who is the CFO at CEAT Tyres, now joins us on the show. Thank you so much for taking time out. You know, a lot of the tire companies have been in focus, and we have seen beginning of green shoots as well for demand for tires. Volumes have been steady, so that's clearly been reflected. Can you walk us through the demand scenario and walk us through which segment is looking the most promising in terms of growth?
Among various segments, original equipment manufacturers' demand has been seen robust growth in the last quarter, and even coming into the current quarter. In quarter three, we continue to see the demand.
We seem to have snapped that line. Just going to get back to Mr. Subbiah and get a sense on where they're actually seeing demand accrue in from. The word from CEAT Tyres management. Quickly refresh what the market screen is looking like. While the index is lying absolutely flat, we're still circling around that 18,300 print. So I don't think the headline number is going to give you any reason to complain. Banks, once again, after Nifty hitting an all-time high. Today, you're seeing a move come in on IndusInd Bank, nearly 1% higher. Bandhan and PNB actually are the ones which are seeing the strongest intraday moves coming in. So about 1.5% up in the green for Bandhan Bank. And you've got PNB as well, which is looking very smart. Almost a 2% uptick is what you're witnessing right now. But I think Mr. Subbiah is back with us. Mr. Subbiah, if you can hear us, please finish your point.
No, I was trying to say that original equipment demand from original equipment manufacturers has been steady for the last 4 months, and we are facing some headwinds in the export side, largely from Europe and also from our own subcontinent. That was the point I was trying to make.
Okay, but tell me, with raw materials cost inflation, sort of cooling off right now, and the benefit expected to be seen in the third quarter onwards, you said that you expect raw material basket to decline by about 2.5 to 3% in the third quarter, as opposed to what you saw in the second quarter. The question is then, should we expect margin expansion in a similar trajectory, or some other factor that one should note which could perhaps impact your margins going forward?
It's true. In quarter two, raw material prices went up by 4%, and after 6 quarters, we are seeing some downward trend in raw material costs. And should our selling prices remain the same, if we are able to hold on to our selling prices, so this drop in raw material prices should translate to margin expansion.
If raw material prices they come down, in order to gain market share or in order to compensate for the price hike, what is the strategy you're likely to follow? If prices come down, will you reduce prices or you will maintain prices?
We have not yet fully passed on the impact of increase in raw material costs in the last 18 months. There has been a lag. And therefore it is very unlikely that there will be any price corrections at the current raw material cost. So we would like any drop in raw material prices to translate to margin expansion. And if you really look at the performance of other tire companies, even quarter two, there has been some impact on margins because even in quarter two, the raw material prices went up. So it's very unlikely that any drop in raw material prices would lead to any price correction in the marketplace.
Started getting substantial business from EVs.
Plus EV is still a very small portion of our total sales. As this is one category which is slowly growing. It is growing, but on a very small base. And we have a good market share in two-wheeler EV side. As far as passenger car side, in the last few months, we are progressing well in terms of getting our tires approved. As of now, our sales to EV vehicles is a very small percentage of the total revenue, and we expect it to grow based on how EV market does in the marketplace.
Share with us?
what will be the focus of CEAT when it comes to EVs? You're saying it's very small, you expect it to grow, and as we all know, you can't maybe use the similar production lines that you have at the moment because those EV tires have to be bigger and bulkier.
Our current manufacturing facilities are capable of producing tires required for EVs. In terms of manufacturing process and technology, there's not much of a difference. However, the specifications of EV tires is different from normal tires, particularly with respect to rolling resistance. And the weight of the tires are also a little different from the non-EV vehicle tires. So in our existing facilities, we would be able to manufacture EV vehicle tires without too much of modifications to the existing equipment.
There has been an indication by the company that we could see CEAT's net debt go up in the second half of this financial year. What is that for? Can you tell us a little bit about the quantum of the increase?
Okay, and as far as current year is concerned, we are planning about 900 crores of capex. Out of that, about 750 crores is on projects, and about 175 crores is on our normal maintenance, R&D kind of a capex. In the first 6 months, we spent half of that, about 450 crores, and we intend to spend the balance 450 in the second half of the year. And we also saw some increase in our working capital in the first 6 months of the year, very marginal, but more in quarter 2, largely on account of increase in the value of raw materials. So overall, our cash generation, is less than our total capex, and therefore, to the extent of difference between capex cash flow and our operating cash flow, we expect our debt to go up. It should be in the range of about 300 to 350 crores from end September levels. That is the kind of a debt level increase that we expect in the second half of the year.
Appreciate your time. Thank you so much for joining in and giving us more clarity on CEAT, the road ahead for the company, looking at a good market share in two-wheeler EVs. As of now, they're talking about